Hello, everybody. This is your daily real estate practice exam question, and we're doing some prorations. We're doing math prorations here, so get out your pen, get out your paper, and follow along with me if you can. A property is assessed at 40% of its appraised value of $135,000. The tax rate is $7.40 per 100, and the taxes are due every January 1st each year in advance. So they pay them for the full year on January 1st. If the closing takes place on August 12th, how much will the buyer owe the seller for the prorated taxes? So the seller has already paid the taxes. So meaning that the seller would have to get credited the taxes that they will not be in the home for. Right? It will be a debit to the buyer, credit to the seller. So we're trying to figure out what we have to do here. And there's a couple of things that we need to do in order to find this proration question. So we're going to take it step by step. Okay. So the very first thing that we need to do is find the assessed value. So what we're going to do is multiply 135,000 times 0.4 or 40% because it said that the assessed value is 40% of the appraised value being 135,000. So that's going to give us an assessed value of 54,000. Now, the next thing we want to do is we want to turn $7.40 per 100 into a decimal that we could multiply our assessed value by. Now, another way you could do this, listen to me, I don't have this written down. You could divide 54,000 by 100. You could do that because technically turning $7.40 into a decimal is dividing it by 100, right? And what we do is we move the decimal point two spaces over because there's two zeros in 100. So if this was 1,000, it would be 0.0074. So what we're going to do once we have either our assessed value divided by 100, and we'll leave it at 740, or if we have turned the rate into a decimal, we then will be able to multiply those two numbers together and get the annual taxes. Then what we need to do is we need to come up with a daily number for the taxes. That's what we need. And when it comes to banking formulas and prorations, unless stated otherwise, we are going off of, for taxes, we are going off a 30-day month and we are going off a 360-day calendar year. So we are going to divide the annual taxes of 3,996 divided by 360. That will give us our daily taxes. Now, what we need to do is figure out how many days left in August there are, and then take the 4 months and add that on. So what we're going to come up with is 138 days. And what we're going to do is multiply the new daily rate by 138 days, and that's going to give us our answer, which was 1531.80. Hope you guys like this. If you have questions, comments below, let me know. Hope this helped you out, and I will see you soon.